Good afternoon, everybody. Welcome to Selecting an Option Strategy. We get together at this time every Tuesday to discuss what we're seeing in the markets and what might be some strategies that we're interested in. Now, I'm going to pick something here today, or I'm going to ask something here today, as I want you to tell me where you have a point of pain when you're trading. Okay, what are the things that are kind of tripping you up? We are going to focus on one of those things today. And if you go ahead and chat that into me, if I can incorporate any of those things into our discussion today, I will. Otherwise, I will table them and we will get to them starting next week. Okay, so point of pain that many of you have had in the past has been just knowing when to get out. Okay, how do I get out of this trade? So we're going to focus on that a little bit here today, as well as maybe some other concerns. Now I am joined in the chat by Cameron May. I'm happy that Cameron's here, fellow coach and friend. He's here to help maybe catch some questions that I can't quite get to. Okay, we want to answer your questions, so let us know what those are in the chat. And those of you that are listening to this on the recording, because I know there are lots of you that do, when you have questions, go up ahead and put it in the comment section in YouTube. We go back and review those questions so you can get your questions answered here as well. Let's go through our disclosures and lay out our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and informational purposes only. Don't consider it a recommendation. We are going to be using the Paper Money software application. That's what you download to your computer. That's the most robust version of Thinkorswim, although the other ones are always catching up. There's new functionality being added all the time. Spread trading must be done in a margin account. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An in-the-money option has a higher risk of being assigned early. Now, something you need to be aware of is that paper money will not assign early, although the live market absolutely can and will assign early. And so we might like to make you aware of those changes. All right. We are, for today, we're going to do a quick look at our example portfolio and talk about exits with some of the trades that we have going on there, okay? Then we're going to review our market conditions, decide maybe what strategies we might want to focus on, okay? Of course, we always want to look at a lot of examples. So those of you that maybe joined in a little bit late, what I'd like you to do is chat into me where you're having concerns or difficulties in your trading overall, okay? One we're focusing on a little bit early in our session is exit strategies. However, if I can incorporate your point of pain in here easily, I will. Otherwise, we'll start working on those next week. All right, so go ahead, let me know what you think. Well, let's jump over to our portfolio, our example portfolio, and just kind of follow up on a couple of things. And I'm going to start out here with we've got a lot of good news, actually, okay, as far as our portfolio goes. We put in Tesla 2 weeks ago. We put in Tesla 2 weeks ago. You can see the day we got into it here, there had been a breakout above resistance. We saw it that day, then we placed our trade. We got filled on the next day, if I filled that out correctly, on the 13th the 14th. I'm off a little bit on that candle. In any case, what's the stock done? Pulled back a little bit. We had a long call vertical where we wanted the price of the stock to go beyond that 340 written in there. Let's make sure it really was 340. And let's see if I can make that a little bit wider here. Can't really tell, but it was a 335, 340. So our longer leg is where we wanted the stock to go beyond, and it easily did that. In fact, today, it went ahead pretty early in the day and hit our target. We had said if we get a big chunk of the money here, we're interested in going out. I go over here to the account statement. We just pull up Tesla here. We can see what the dates really were here. So it looks like, yeah, we put the trade in on the 13th and it was filled on the 14th. So my marker might be slightly off on that candle. In any case, we got filled at 220 and we said, hey, if we get 70%, we want to go out. 70% equated to about 416. So we just had that sitting out there. And then you can see pretty early this morning, 20 minutes after the market was open, it executed our order, got us out of the trade, even at a little bit nicer price. All right, $4.30. We can say thank you very much, market. So on those 6 contracts, we had a net here of $2.10. So if you multiply that out, they gave us a profit in the neighborhood of about $12.60, not including the commissions. Okay, there's always going to be some commissions getting in and commissions getting out, but a pretty decent sized little profit for a 2-week trade. Now, last week, one of the strategies that we talked about was something that we haven't talked about in a long time, and it's covered calls. All right, and we put on 3 covered calls that we're going to look at here. Let's collapse Tesla. Let's open up GM first. And let's see here if we have enough space. I guess we have enough space here. This is nice. On GM, we did a buy right, and we bought the stock and sold the call in one simultaneous motion. Okay. And what has happened since then? Well, we got filled at $49.76. The price of the stock right now is down a little bit, okay, $49.09. So that part of the trade, we're down on a little bit, but has our hedge leg help us? Yeah, it actually has. We brought in 68 cents. Right now it's worth 60 cents. So earlier in the day before kind of this stock had a little bit of a move, we were sitting here at I think it was about 40 cents this morning. And it was like, okay, that little hedge of the covered call is helping the position overall. And so you can see right now we're down on it a little bit, but made $25 today. If we look at the chart, we're going to notice that there hasn't been a lot of movement. Okay, so we got in here on this day. Actually, there was a little bit of movement because we had a little bit of pulling back, and then today gave it a little bounce. Okay, and so that hedge, that call is helping us out. Now, one thing we could do is we could go in and say, do you know, if we get a chunk of this, let's go and buy it back. And the chunk that's going to be our measuring stick today, we're going to say if we get 80% of that, then we're going to have Thinkorswim go buy it back for us. Okay, so on GM, that 80% would leave us with 20%. That means we should go buy this back at about 14 cents. Okay, that's what I calculated. So we're just going to go in. That's the only part of the trade that we're going to work with. So we're going to do create closing order. The top one grabs the stock and the option. This one just grabs the stock, and this one is the one that grabs the option. So we're going to go in here. We're going to say, go buy it back if it gets down to the neighborhood of about 14 cents. How did I get there? I took 0.2 times our initial credit. All right, so 0.14, and then we're going to make this a good till cancel. Now, if we get called out on this trade, we're okay with it. Okay, if it hits our strike price, we're happy. We receive something for selling the call, and we'll receive some growth in the stock. Okay, so that's why we're only looking to maybe get out one side of it. All right, next one up. Let's come back over here to our monitor tab. There's our GM. UBS, kind of a similar scenario here. Got into the stock for 44.08. It's down to 43.74, so it's dipped a little bit as well. Has this idea of having 45 cents of call income helped us? Yeah, it has helped that particular part of the portfolio. Now that call's worth about 28 cents. But the same thing here. Let's go buy it back when we have 80% of it, leaving 20% left. And so in that case on USB, we're going to go buy that back for 9 cents. Okay, so we're going to create the closing order, go down to the bottom where we're only grabbing the call option. We're going to put it on here at 9 cents, I told you. Okay, 9 cents. We're going to make that good till canceled. Again, we would leave the stock piece alone, would only buy back the call if we can get the, a decent chunk of it. And then what we'd look to do is maybe on the next rally, and looking like the stock's at resistance, looking like it's ready to pull back, then we would consider selling another call against it. All right. I actually have questions with what we're doing right here. Go ahead, chat those in, okay? All right, last one. Our other covered call, Verizon. Kind of a similar note. It's down a little bit too. You can see all of these positions are down a little bit. And so that's nice that we're not, I mean, we're down this amount on the stock, right? We collected 44.04. The stock now is down to 43.50. So it too is down a little bit. And man, this 44 cents has been a nice little buffer for us. Okay. Same thing. We're going to go buy this back on Verizon at 9 cents as well. We're going to create the closing order, grab the bottom one, put our 9 cents in there, 0.09, make it get till canceled. We'll be happy if it goes and buys it back at that chunk. We'll also be happy if we stay with our stock and the stock has a little bit of time to rally up, right? We would love it if this stock rallied to whatever the strike price is, 45.40, right? That's a couple of bucks away. Yeah, that would be a nice little growth on that stock. All right. Those are our planned exits for covered calls. Now, do you have to do that? Do you have to put in an order to buy back your short leg on a covered call? You don't, but it can be helpful for you as well, as long as you're willing to say, I'm happy if I get called out. I'm happy if I don't. Okay. And you're just, either way, you know that you're going to make some money in the trade. If the stock advances, great. Stock advances and we get our premium. And if it doesn't, maybe we buy it back cheaper. And then maybe that gives us an opportunity to go and sell another call against that stock position. All right. Hopefully that makes sense to you. If not, go ahead and submit your question here. Now, I was looking to see what some of you had said on where your point of pain is here, okay? And so on your point of pain, Scott says, sometimes exiting too late can be something. We'll continue to talk about exit strategies here. Sometimes you've been long with no exit strategy. So it's really helpful to decide up front, is this going to be kind of a short-term swing trade for me? Is this going to be a little bit longer period of time trade, whether it's an option or a stock? Just kind of, if we can think about those things in advance, it really helps us on our exit. Kelly says entries for sure. And Ram says, could you go over the places to exit in an option trade? We will on some of the ones that we've talked about. We talked about our covered calls here, when we might want to get out. The new ones we're going to talk about when we might want to exit as well. Okay, so we will be covering some of that for you. All right, let's go look at our market and let's start with the VIX, the volatility index. Volatility was really high a couple months ago in April, and since then it's definitely backed off and down here in what I'm going to call more regular ranges. It's not the lowest the volatility can go, but it's definitely in a lower range, right? If the lows we've been seeing this year have been about, say, 12 or 11 on the VIX, and right now it's at 1895, so around 19. Yeah, that certainly percentage-wise is a lot lower than if we're looking at volatility up here at 50 and 55 and 60, where it got really, really high. Then the market was definitely pulling back. There was a lot of fear in the marketplace, and the put call buying ratio was evident, right? Because more people were buying calls than puts, which pushed up the VIX. So I'd say right now, yeah, it's in an okay range for it, where it's not super high. Let's go out to the SPX here. Now, SPX, you guys have been following it along. I'm pretty sure this is a 3-month chart. It bottomed out here about 4,900-ish. And then started putting in what? Higher highs, higher lows, higher highs, higher lows. Recently had this big gap up. I think that was last Monday's price action, or two weeks ago, price action that popped up there. And then it pulled back a little bit. And then today would do big gap up. If someone were looking for it to maybe, if they were looking at this as a flag pattern, some might have looked at that and said, oh, look at that. It is broken out of the flag consolidation. Some might use it for an entry if they're trading SPX. What's interesting when we see that kind of a move, on the indexes, we're likely to see that in a lot of stocks. Up NDX as well. It's kind of a similar thing here. Rallied up, had a little bit of pulling back activity, and then today, man, breaking out of that flag really strongly. Some might, if they don't use price patterns, they might also see this as maybe bouncing, maybe at some support level here and then bouncing off the 10-day. That's the blue moving average there. All right, so we could see that in a lot of stocks, and indeed, we are going to see quite a bit of it. Okay, first one we are going to take a look at here is, let's go ahead and ARM Holdings. Now, ARM Holdings has kind of a similar look to what the market was looking like, right? Had this nice rally up, so it had about a 4-day flagpole. It consolidated here for about 5 days, and 2 to 5 days is ideal. We don't always get ideal. And then we see the breakout here. Now, if you're trading the flag pattern, which some of you might do, let's go ahead and duplicate the drawing. We could put a target on it. We could put it here at kind of the backside of the flag consolidation area, or we could put this where we see the breakout area from the flag pattern today, and that would give us a little bit higher target. We're going to go for the little bit higher target here today, okay? Now, as we know what the market's been doing, and we see what this stock did, I want you to say to yourself, or go ahead and chat it in, what strategy comes to your mind that you think, this is the kind of strategy I think I'd like to do on this particular stock. Now, we're probably going to get various answers, right? There may be some of you that maybe know 2 or 3 strategies. And so you're going to pick between those 2 or 3 strategies. We may have others of you, this is an intermediate level class, so there could be others of you that are comfortable with a lot of different strategies, okay? So what could we consider? Let's come back over here to our slides. And I'm going to just kind of put a mental cross through on the bearish strategies right now because the market's more bullish. We're probably going to see more bullish type opportunities. Now, if we're looking at, what those opportunities might be, we could look over here, right? We could look down the list of bullish strategies here. And there may be some of you that might consider doing a neutral strategy or 2 over here, kind of like we did last week with the covered call strategy. Kind of those stocks weren't making big moves and they were a little bit more neutral looking, but some might look at a long call, a cash secured put, a long call vertical, a short call vertical, a call diagonal spread, or synthetic stock. And so you might be going, man, there's a lot to choose from there. How do I know? And the answer is you don't always know, but you do have some expectation for the stock and what it's doing. With that flag pattern on, we can say, all right, based on the flag pattern, we might have a target up here for the stock. And if that's the case, you might choose something that maybe does have a little bit more of a target, like you could do with a long call or a long call vertical or a call diagonal spread. Or the synthetic stock, I would say this is the most bullish one of all, okay? So as you're thinking through it, what strategy did you say you might be inclined to look at? Chuck Butters, is there a reason why I always use a 3-month, 1-day time frame? Yeah, Chuck. A lot of the strategies that we look at in this class are a little bit shorter term, okay? So that's why I have a 20 and a 10 simple moving average on the screen. Those are more short-term type oriented to give us an idea of the trend. And unless you're doing something that's a longer dated strategy, maybe you are buying a long call that you buy 6 months of time worth. Yeah, then we'd want to see a little bit bigger chart sitting there than just say a 3-month chart. But a lot of these strategies fall into these fairly short time frames. So appreciate you asking that. Brown says maybe a long call vertical could be a consideration. All right. Some of you that just answered to your computer screen, I'm glad you just answered to the screen. Let's jump back to our chart here. And let me get that little guy out of the way, and let's come over here to the trade tab. Now, there's a couple of things we could do on this trade that I lined out. One is we could say, this looks quite, maybe a little bit more directional versus neutral. If we were looking at, say, a short put vertical strategy, then we might just say, hey, let's see if it can stay above a certain point, because maybe there's not a lot of room for it to move. Okay. Or we could say something like this. Well, gee, maybe the stock will get up to here. I'm going to write down what that target is with the flag. That looks like 143 and some change. So I'm just going to put it at 143 there. Okay. That may enter into what strategy that we work with. Now, the one that I was considering here was initially, I'm going to give you two that we can choose from, and I'm going to have you vote. Okay, so I'm going to tell you up front, I'm going to have you vote. Whoever gets the most votes is the one that we're going to go with. Okay, so trade number one, which might be on some people's horizons as maybe something they're comfortable with, would just be doing a long call vertical. And I was looking at doing here the 135 and the 140. Now, the reason I'm going out to the 140 simply is because of the open interest. A lot more open interest out here at those $5 increments. Okay. This is a monthly expiration, and really these weeklies are probably a little bit too short for that kind of a strategy, generally speaking. Okay, so let's put it in here. We're going to say buy vertical, and we're going to swap this out for the 140. And I'm going to go ahead and just kind of lock that in. It shouldn't shift too much since the market's closed right now, but $2.05 is what we would risk in this trade. We do need, a decent move on it because the stock's just a little bit below 134. So we would need it to move about $6. Okay. And that's fine. We know that up front. How far would $6 be? If I were to go to the 140, which is pretty close to where my mouse is here, it's not quite to up here where the potential target could be based on the flag pattern. So we could put in, on this one, actually, what we're going to end up doing is we're going to put it in based on the price of where that flag target could be. Okay. The stock would be above 140 at that point, but it doesn't necessarily mean that it's at a max gain. Okay, so let's see what this would look like. We would be risking 205 to make 295. Okay, so, and it requires a pretty decent move. We'll go ahead here and we're going to do a first trigger sequential, and we're going to do a couple of contracts here. We technically in this account, we can risk $1,500. Many times I don't even go that high risking that amount, but let's go ahead. We can easily do 4 contracts here. If we're risking what, basically $1.95. Is that right? 295. We'd be risking 205 to make 295. Let me say that correctly. Okay. When would we want to get out here? When should we exit? That we're seeing that kind of a nice little flag breakout that some people might like to use as an entry. On a flag pattern, if the stock pulls back down into this consolidation area, you want to close the trade. We look at it here where the stock is right now, and if it were to pull back, right now it's at roughly 134, and pull back down into where the flag pattern is, maybe about 125, that's a decent pullback on the stock. That's about what? $9? Yeah. So we really, you could go deeper into the candle or into the flag pattern, but we're not going to. We're going to go, if it kind of just gets a little bit in there, it's probably not going the right way. Maybe it was a fake out rather than a real true breakout. Although I do like the volume that we're seeing on that flag pattern today. Okay, so let's go structure this and set it up. Let's go ahead. We're going to create an opposite order. And on here, we're going to put the target at 143. We'll leave off the 37 cents as far as an exit on the top side and then an exit on the bottom side. We are going to put it at 125. Okay. If you wanted to use some cents in there, something you could, obviously, right? And so let's go ahead. Let's set this up. We're going to do our conditional order here, and we're going to put it in. We're going to say, okay, if the price of ARM gets, in this case, let's go greater than or equal to 143. If you want to add on cents there, you can. we'll just do that. Or if arm goes the opposite direction, I'll make sure I've got that selected the right way. Or if it drops down to 125, those are the conditions we want out. Okay, let's make sure our arrows are pointing the right way here. So we're looking for this. If it gets triggered, let's see here. The action is less than or equal to 143, so we need to switch the direction here. We want this to be less than 125 and greater than. So we're going to change the direction of our arrows here. Not a big deal. Now they're facing the right way. Okay, we're going to go ahead and hit save. We're going to send this off. We're going to put it in our bucket of option strategies. Now, do you have to exit a long call vertical that way? You don't have to. But I like to show you a variety of ways that some people could consider doing it. You know, with the height of the flagpole, typically trading that flag pattern, that's the distance we expect it to go. And that's why we use that as a target on the upside for the stock to get to. Okay. Let's see, probability traders, I'm expecting a breakout to 105.60. Okay, you're talking about Costco there. Okay. All right. Next up, what could we do? I had another trade pegged here that we could do. And this one, we would do a long call diagonal, where we would buy the long option in July and sell the short option in June. Okay, so this one, we're looking to buy the July option, but we're going to start this out at the June option. And we are looking to sell here. I was looking initially at that one. I don't want it to be the same strike price here. And I had it pegged to go a little bit differently than how we did our vertical. You know what? We'll just do the one trade. Okay, we'll just do the long call vertical. Okay. Next up, after ARM Holdings, let's look at the stock, Amazon. Now, both of these stocks are on the NASDAQ 100, and I think both of them might be on the S&P 100 as well. Now, we have a little bit different looking flag here with Amazon. Amazon, I started its flagpole right there on the first green candle that started this up action. Okay, so it has a pretty long flagpole. Let's see, it consolidated here, maybe a few days longer than 5 days, maybe 8 or 9 days here before it did what broke out of this today. Now, this has got a pretty long candle here. We can duplicate the drawing. We're going to come bring it down, conservative entry. We would place it right there at the back of the flag area. If we wanted to be more aggressive, we'd put it up here. This one, let's be more conservative. All right, so we're going to put that at the back end of the flag, and our target here gets up to 196.18. That is pretty decent move given that the stock right now is at 206. Okay, one thing that'll help maybe give me some direction as far as maybe what could we expect out of a stock here is, you know, what has it done recently? Okay, so on my watch list, just have the NASDAQ 100 here. I have a column calculating here basically what is the 1 week return, which is really super short term, and what's the monthly return. And if it's a small amount or even a negative amount in the 1 month return, then we might not really target it for bullish trades. If it has, say, a small monthly return, say this on Intel, Intel's up 0.2% over the last month, and maybe suppose Intel had a nice bullish entry you liked, you might not be picking something that has a really far away target just because right now it's not moving a whole lot. Okay, so with Amazon that we're looking at right now, it's up in the last month 9.76%, which is pretty decent. It's not the biggest here. There are some that are certainly bigger. And just for fun, ARM, let's see where ARM fell on this list. It was on this first look here. Although I'm not seeing it right now, we'll just focus on Amazon. Okay, so given this and the strategies that you personally might consider, what would you consider here? Would you consider a short put vertical? Would you consider a long call vertical? Would you consider a synthetic, which means we buy the call and sell the put? That's the one I pointed out was one of the most aggressive bullish strategies. Okay. And you know what the market's doing. Market's more bullish. Volatility is a little bit lower. When volatility is lower, we're not going to have super juicy premiums. Okay. So just from a perspective of strategy, I'm interested to hear what you say here. Yeah, some of you are looking at some other charts, so I won't really address those. Retail's kind of tough right now. Says I'd never eat here. Retail, you're right, it's kind of hit and miss. There are some that are doing great and you didn't expect them to. And there are some that are really having some tough misses. Yeah, that have started a little bit of a downtrend for them. Okay. Riceberg says, you know, maybe we could do a long call vertical here. Healthy Use agrees. Okay. Let's look at the trade tab and I'll kind of tell you what I had in mind here. This particular one, we could do a long call vertical and have the target be up there at the top of where that flagpole goes. And I was looking here, we'll see if this looks decent or not. I was looking initially at the 205, 215 in our Junes here. So 205, closest to the current price of the stock, so that's our at the money, and 215 is $10 away. So another buy vertical. Let's space this out. We're going to go down here to 215. And that's where we'd need the stock to go to in order to start getting in an area of having a gain on this one. Now, 215, where does that sit? 215 is about right there. So I'm going to say it's a little bit more than halfway up that flagpole. It's not as high as getting to, I think I may have told us the wrong number here. I think I told us the bottom number, not the top number here. Top number here, yeah, is 227, not 196, 227. It's where that target is. So we could put a long call vertical and have that as the target, knowing that it actually doesn't have to go quite that far to be in a territory of being able to max out. So let's do this. Let's put our initial target here at 227. And if it comes back down, if it comes back in this flag area, we just want it to go out. That's how you trade a flag pattern. It's just, okay, it's not doing what we thought. It's not moving up. Let's get out. And so we're going to call it pretty tight on here. We're not going to go clear to the bottom end of the flag, although you could. But I'm going to say right here's a decent distance down in there. And that's about, let's call it 198 and a half. Okay, 198 and a half. We're going to say get us out. Then we're going to look at a different strategy with this that somebody could consider. All right, so let's see. 430 is our max loss potential. What's our max theoretical gain? Well, it's going to be $10 minus 430. So that's going to give us what, 570 is our max theoretical gain there. So let's do 3 contracts. We'll risk, you know, a little bit under that $1,500. And let's do a first trigger sequential and create an opposite order. And then let's go set that up in our conditions window. Now, I'm curious, how many of you are starting to use this idea of putting on conditional exit points based on the price of the stock or some other condition? Okay, are some of you starting to use this a little bit more regularly? I hope that the answer is, yeah, at least you're practicing it in, say, your paper money account so you can get a little bit more comfortable with it, okay? It kind of frees up your time a little bit. If you know that's where I want to get out, great. We plug it in there, and then you don't have to be emotional while it's trading. Oh, maybe it's almost there. Maybe it's, you know, doing something I don't want it to do, but we've already fixed the parameters where we want to get out if it's good, or we want to get out if it's bad. Okay. So on this, we're going to put symbol Amazon, and we're going to trade that or change that sign on the get-go. We said if it can get to 227, or if it gets down to less than, we said 198.50 is going to be the 2 there. Okay, I'll make sure that we've got this filling out the right way. We want that greater than or equal to and less than a 198.50. Okay, we're good with that. We're going to save that. Let's make this good till cancel. We don't want to have to set it up again. And I do want to say this as far as exiting. If this stock makes some progress up the flagpole, do we have to leave our exit orders where they are? Heavens no. Could we be moving up our stop losses? Absolutely. If we maybe saw Amazon slowing down, maybe not making big candlestick motions, would it be appropriate to say, maybe that target we have up there is a little too frothy right now for a June expiration option? Could we bring our target down a little bit? Maybe go to where that initial target was about what did we say here? Based on the length of the flagpole, it was going to get to 277, but maybe the previous peak here, where we might have that swing target, it's a little bit more than halfway. Could we adjust? We absolutely could. Okay, you want to have rationale for it, why you're doing it, and could you adjust them every single day? You could. Now, if it doesn't move a whole lot, you might not want to, but if it's making some decent moves the direction we're interested in it going, we absolutely could. And then cinching up our stop loss along the way as well, our exit points. All right, on our trade tab, let's come back here. Let's confirm and send. We're going to send this to our option strategies bucket. Let me see if there's any questions on anything there in particular that we're talking about. All right, let's carry on. Looks like we're in good shape here. Now, I hope all of you have become subscribers to our Trader Talks channel. When you do become a subscriber, it makes our content a lot easier for you to identify. And so I'm going to do something right here. But I actually had this open, but I think I have it open on the wrong screen. So we're just going to come in here to our YouTube channel of Trader Talks. And I want to show you something that didn't go to the right spot. Let's come over here. And the quickest way I'm going to get here, you're not going to have YouTube Studio available, but that's my quickest way to get there, to our Trader Talks channel. There we go. When you're a subscriber, man, we have some nice content for you to help you out. What's going on right now, what the next class is that's coming up, which won't be till tomorrow morning at the opening bell. With, I think this was going to be our futures class tomorrow morning with Ben Watson. In any case, it allows you to just find our playlist. And I'm going to show you something that is brand spanking new, okay? Something that's been fairly new has been our shorts. And we have some really short videos for you here. Something else that we have for you is something called a new post. And what it is it's our regular schedule. So, you know, when we're looking at the live chart action, we can kind of see what's coming up, right? But we can't, I was going to say for the hours coming up, right? So maybe for the day. But this is going to show you what the calendar is, what our regular schedule is, what those classes are, and who typically teaches it, okay? So that you can have an idea as you're doing some planning. I really like this, that we can have access to this in our YouTube channel, because that's where we do a lot of navigation. It's where you do a lot of navigation. And that way you don't have to log into Schwab, although it's available there. This is a really nice layout on that. Okay, so if you haven't clicked that blue subscribe button down in the bottom right, you might want to consider doing that. All right. Now, a different trade that I was thinking about here on Amazon was a really bullish trade. If we were thinking about a really bullish trade, what might it be? Might be a synthetic. And so because we sold the call here Oh, actually, we bought the call here for our long vertical. I'm going to just skip down to the next strike price lower. This technically, I believe, is at the money, the 207.50. And we are going to buy the long call and sell the same strike put. So 207.50, we're going to click on the bid price. Now, you don't have to use those exact strike price or that exact strike price if you want to arrange it a little differently, right? If you wanted to be a little bit more aggressive on your call and go a little bit deeper in the money, but what we're looking to do here is kind of have delta action pretty close to 1. So a $1 move in the price of the stock would, between those two options, give us roughly a $1 move for that synthetic. Now we're starting out the trade is a credit, which can be helpful. It can start out with a credit. It can start out with just a lower debit, net debit, okay? This one, we might want to be a little bit more picky as far as our exits. Meaning, if this thing doesn't jet up for us, because we've got two bullish positions, it could get in a scenario where you're looking at a decent loss pretty quickly. So on this one, my proposal is this. Rather than having the exit be as it dips into the flag, we're going to have the exit be here a little bit below today's low on this candle. Today's low on the candle is 202.19. And what if we were to give it to say 202.49? Okay, 202.49 is a few cents below where the low was of today's candle. All right, and then we're going to be satisfied with kind of a smaller move on this, okay? Let's use our swing target here, which is basically where was the previous high point. That looks to be about 214.64. So we're looking for a smaller move down to get out, chop it off early, and get out when you have a reasonable gain. Or again, you can always move these, right? These orders that are in there that are conditional, yeah, you can just kind of inch them along as the stock moves along. Okay, so this doesn't have to be your final ending point here with these trades. So we're going to wrap up on this. We're just going to do one contract here. We'll do our first trigger sequential, rate that opposite order. And just want to double check you, making sure it's a buy on the call and a sell on the put, which it is. All right, let's do our conditional exit. Again, we're going to do it based on the price of the stock. All right, so our initial target to get out is if this goes greater than or equal to our peak 14.64. If you wanted to back off on that, you definitely could. Or if Amazon if it gets less than or equal to a pretty tight stop here, it's going to be 202.49. Okay, so basically we're kind of adjusting for, say, a 10-point move between the get out when it's low or get out when it's high. Okay, let's make sure we've got these the right way. So greater than 214. And that one didn't click in. Why didn't you want to click in there for us? Let me just retype this. And let me just look at the current price here. Yeah, it's definitely below the current price, so it should take it just fine. 202.49. Well, I'm not sure why it's having an issue going in here. So what we're going to do is we've got to wrap up our class because my time is up here. But let's just review what we did. Okay. And I'll have to fiddle with this when you're not here with me and figure out why it's been a little being a little bit weird there. Okay. But I'll get it in. So if we go to, I'm going to have to hit cancel here. If we go to our working orders, we did we did a trade on Amazon. This is going to be our second trade on Amazon, the synthetic. We did a call vertical on ARM Holdings, okay, and we have targets where we want to get out there on that particular trade. And then we reviewed our covered call strategies, what's going on with them, and we showed where our call vertical got out early today with a nice little profit. That was on Tesla. I think it was on Tesla. Yeah. All right. Any questions that I can clarify before we close things down? Now, I hope for you that maybe this gave you some exposure to some different ideas for exiting, because that had been kind of the main concern we were talking about today. I'm going to go ahead, I'm going to look through the chat after our class is over, see if there are any other points of pain that you would like us to spend some time on. We'll start incorporating that next week, what your points of pain are. All right. Cameron, thank you for helping me out with chat. Thank you to each of you for your participation here. We'll start again right tomorrow morning, right at the opening bell. It'll be Ben Watson with futures. All right. Or no, it's not. It's index options. Do you know what? It's not futures. It's index options. So come join that class. You'll enjoy. Thanks, everyone. Have a good evening. Bye-bye.